review, and we have some slides, and then there will be room for questions afterwards. And also welcome to all of you who are with us on the telephone line. So let's start. The message in the report is Swedish major banks are currently financially strong, and maybe you are not surprised over that message because we have had more or less that message now for several reports. But the Swedish economy has done relatively well, and so it is with the Swedish banks. They are delivering good profits, and they have continuously improved their capital situation and also liquidity. When it comes to the analysis in the report, I will come back to that later on, but just to give you the main conclusions from the beginning, I mean, the main risk for us is that there will be a deterioration in the European economy. Sweden as a country, we are reliant on that EU will come back and improve, and but if there will be a deterioration, it will of course affect the Swedish economy and also the Swedish financial sector and the Swedish banks. And if there would be a deterioration in the economy, it may also affect the housing prices. And you know that we are a little bit worried about the household debt and the housing prices. So if we would have a major fall in housing prices, it would affect the household sector. It may affect private consumption and the demand in the economy, and further on the growth and unemployment rate. We have made our stress test, and they are. You will find the result in the report, and you can see that the Swedish banks they can cope with quite a lot of stress, so we are not worried over credit losses. The Swedish banking system, it has certain characteristics, and you will recognize them when we show them here, but just to repeat, the Swedish banking system is very big compared to GDP and to Sweden as a country. So that is one thing that we have to take into account. It's also the case that Swedish banks have quite a lot of funding abroad in foreign currency, in euro and US dollar, and that is also a characteristic that we are analyzing, and that is linked also to our recommendations. In our last report, we had a recommendation on a better framework for STIBOR, and the Swedish banks, they have done a lot in this area, but there are a few measures that we want them to take further on in order to make sure that we have a good framework in place. So my first slide then here is on the loan losses, and you can see here that our forecast is that banks will deliver good profits also for the coming years, and we foresee that the credit losses will continue to stay on a low level. If you compare the capital level in the Swedish banks, this is core tier 1 capital. Swedish banks, they have a high level, a core tier 1 level, also in comparison with the foreign banks. So that has been, we think that our recommendations in our earlier report has contributed also to the view that it's quite good for banks to have a high capital level. And we have also seen throughout the crisis that it's been good for the banks to be well capitalized, because it's also helped them in their funding in foreign markets. But of course, you can choose to measure the capital level in different ways. And if you go from risk-weighted assets to just comparing the asset side with equity, you get a gross ratio instead. And if you, in this comparison, you can see that the Swedish banks has a lower ratio compared with foreign banks. And that is of course because they have a big mortgage portfolio on their balance sheet, and the mortgage portfolio has low risk weights. The developments in the euro area comprise the greatest risk to the Swedish economy and to the Swedish financial markets. And we could talk on the European risk for hours here, and we will not do that. But just to show you one slide, that this is the interest rate that meets new corporates in Europe, in different parts of Europe. The yellow line is the ECB main refinancing rate. The red line is the core countries, what meets the corporates in core countries. And then you have the peripheral countries, that is a blue line. And here you can see that there are quite big differences, and it shows that the transmission mechanism doesn't work efficiently in parts of Europe. So there is a lot of things that has to be done. A lot has been done, I should say, as well. I mean, there are lots of steps taken in Europe, but if we look at the growth figures, there is a very slow process for Europe to come back to a more normal level, and this is something that we are, of course, following very closely, and hopefully it will turn better during 2014. So I mentioned funding in the beginning, and this slide shows that banks have a substantial part of their funding abroad and in foreign currencies, and that is one of the characteristics that I mentioned that we have to take into account, and that is a reason for us to recommend that banks have high capital levels, and also that they fulfill the liquidity coverage ratio, and that they also have a better position when it comes to the stable funding ratio. Linked to the reliance on foreign market, it's important for us to make sure that there is good trust in banks and that they are transparent, so that there is investors have a good insight on where the risks are in the Swedish banking system. Housing prices, there has been a little bit of a change during this year when it comes to housing prices and the household view on the economy. During 2012, Swedish households were rather pessimistic about both the Swedish economy and their own economy, but we have seen now during this year that Swedish households are more positive, both to the economy and their own economy and to the Swedish economy. We have also seen that there is an increase now in housing prices, and we can also see that there is an increase in household debt. So this is an area where we, both when it comes to financial stability, but you are also aware that this is a discussion we have when it comes to the monetary policy discussions. And this slide shows the household indebtedness, and we have shown that slide before, and during 2012 it was not a major change, but we can now see that the forecast is that there will be a slightly increase in household indebtedness over the coming years. And relative other countries, this is a high figure, and this is something that worries us. There are steps taken. The supervisory authority introduced the loan to value. There is a discussion on risk weights, and the Finansinspektionen, they have also decided to have a floor for the risk weights on mortgages at 15%. And I think this is a discussion that we have to continue with. There is also a discussion about amortization, and if it's possible to have more requirements on banks in this area. And the Swedish Financial Policy Council came with their report last week, and they highlighted the need to build more in Sweden. There is a need to build more, both apartments and houses, and the demand is much higher than the supply. So you have to look at this as a package. There are several areas where we need to probably improve in order to have this in balance again. This is from the Supervisory Authority's investigation or questionnaire, which has been published, and this is the household indebtedness in certain areas in Stockholm, Gothenburg, Malmö, and other municipalities, and it is just the indebtedness on new new loans to households, so it's not directly comparable with the diagram I showed you earlier. But still you can see that in the Stockholm area the indebtedness is much higher than it is in other parts of Sweden. In the stress test, I mentioned that banks can cope with more risk, and we don't foresee a problem here. You can see the 4 banks here, and they will be able to cope with credit losses to a rather large extent. When it comes to the banking system in relation to GDP, we are the 5th largest banking system here, and you can see that here again that half of the funding is in or half of the operations are in other countries outside Sweden. So this is something that we have to make sure that we can handle, and I mean you are all aware that we are building a new regulation, a new supervision both in Sweden and in Europe in order to make sure that the government don't have to step in order to help the financial system, and in order to prevent for taxpayers to step in. So Swedish banks need more resilience in the longer run. They are robust, but we think that there are more steps that can be taken in order to make sure that they will be resilient also in the longer run. On the capital, this is the same recommendation that we have had earlier and that we have also issued together with the Ministry of Finance and the Supervisory Authority. And banks fulfill the request to have 10% Core Tier 1 capital from 2013, and the next step is to have 12% from 2015. And you can see here that 3 banks are already fulfilling that, and Nordea is on their way to fulfill that requirement. And when it comes then to liquidity, we have had a recommendation on liquidity coverage ratio, and all 4 banks are fulfilling that requirement. We think for the more stable funding, for the longer time funding, we are recommending banks to improve also in this area. And here again, I mean, we are maybe a little bit surprised that banks have not done more over the period, because it's been quite easy for them to fund themselves, so they could have improved this ratio as well. One reason may be that the ratio is still under discussion in the Basel Committee, and the Basel Committee has not decided about the final definition. But still, we think this is an area where where we hope that banks will continue and improve their funding. So that is part of our recommendations. And we would also recommend that banks are more transparent in this area and publish in their quarterly report their ratios on the NSFR. One bank, Swedbank, is already publishing ratios on this, but for the other 3, we hope that they will also be more transparent for the future. And finally, on the STIBOR, this has been a discussion we have had for a long time with banks, and in our report in December, we recommended banks to set up a more formalized framework and have agreements between them on how to deal with STIBOR on a daily basis. And it has been decided that Bankföreningen will take responsibility for this, and there are now agreements in place, and they have made more or less what we recommended then in December. There is still one thing that we think is quite important, and that is to set up an independent review of the process and how they are dealing with this on a daily basis. So that is our final recommendation, to set up an independent review. It could be an external firm or something else that is on a regular basis reviewing and verifying that they are working in line with the agreements. Just to highlight for you that we have had several recommendations over the last 2 years in our financial stability report, and banks have adhered to our recommendations to a large extent. So here are the recommendations that banks have already fulfilled, and I will not go through them all, but it is linked to capital, liquidity, and to transparency. And that is the 3 issues that are very important for us to make sure that banks are well capitalized and that they have enough liquidity and that they are improving their liquidity position. And as we are relying on a foreign funding market, it's also very important for us that banks are transparent and that it's understandable where they have their the risks in their balance sheets. There is also a transparency index. Don't ask me about how this is calculated, but you can see here that the 4 Swedish banks, they are also highly ranked on this transparency index. So I think that is good both for them and us. So Swedish major banks are currently financially strong, but for the longer run, we think you shouldn't be complacent. You have to continue improving the positions. Maybe Mattias, you would like to add something I should have elaborated more upon?
No, I think you covered most. Just to add one thing, and only one thing. I think when it comes to STIBOR, I think it would be beneficial for the system if more banks joined, actually, in setting the STIBOR. I think there are room, and I think there are capacity for some other participants to join setting the STIBOR. I think that would help.
That would be make the STIBOR more robust.
Yeah.
Okay, so now we open up for questions. Who would like to start? Yes, please.
I can start. 2 areas really. First, on your recommendation that the Swedish banks should have a Q1 ratio of 12% from the 1st of January 2015. There's a new wording or new paragraph here saying that you would not like to see higher Q1 ratios coming from lower risk weights going forward, and that you would consider to have floor rules also in a Basel III environment to prevent such a behavior. From here, as I read it, from here an improvement should come from either that the capital increases, real capital build-up, so to speak, or that something really happens to the asset side, rather that some parameters change in the IRB models. So my question is there, if you could elaborate a bit on how you think about that kind of floor rules and what kind of requirements should the 12% be on some kind of floor rules, etc. How you think there around that? And the second question was on the NSFR. I agree with you that one reason that the banks haven't complied is probably that it's widely expected that it will be changed, potentially quite drastically, and it will be implemented in 2018. I think, would you consider implementing some kind of Swedish version like you did with the LCR, and even earlier than the 2018, in accordance with this 2010 proposal or something similar? Mm-hmm. Those are my 2 areas.
Shall we?
Okay. On your first questions on capital and floor rules, I think there is an ongoing discussion on a global fora, and also there's been a lot of discussion about whether or not European banks has really increased the capital position, or it's been just optimizing risk weights. So there is a discussion all of us are aware of, and the Basel Committee is looking into it, and we assume something's going to happen. So we are not saying, so one of the things are the transitional rules and about floors, and here what we really want to say is this is an area where there are a lot of discussion going on. Maybe we shouldn't rush, before we know exactly what should happen. There are different views on that. Some probably wants to have floors. The Swedish FSA has introduced floors when it comes to mortgage risk weights. There might be corridors or things moving forward. We don't really know, but there is an open discussion and something is, we assume something is going to happen and something is going to be implemented that will at least put some limitations on the maneuvering on that. So is it wrong to optimize and make sure that you can use your internal models? No, we don't. We're not saying. If we are saying that, that's not really what we should say. Banks can, of course, do that, and I'm sure that some banks have higher risk weights on corporates, and some has lower, and of course, there might be room for improvements of that. So I think of course, there is still ways to optimize. When it comes to the NSFR, no. What are we saying? We have been saying for some time that we think that Swedish banks should decrease the structural liquidity risk. And Swedish banks have, and they have worked a lot on that side. It's just that the last couple of quarters, nothing hasn't really happened. So we would like to see Swedish banks to continue to decrease the structural liquidity risk. The problem is that when we say that, we want them to be higher, to have a higher measurement based on the NSFR. We can't publish the NSFR from bank by bank. We publish a structural liquidity risk measure, which is similar but not identical. And globally, some banks are already publishing NSFR. Some Swedish banks are, not all. So what we really are saying, continue decreasing your structural liquidity risk, and also make it easier for everybody to understand how you are improving it. I don't, currently we are not thinking about the Swedish, gold plating or Swedish NSFR. We are just saying, we know you have worked hard with it. We know you have done a lot of improvements, and we think that the improvements needs to continue.
Just if I follow up on the floor rule, so if I read it correctly, it's just a way of saying that when we now get full Basel III, assuming that we get it from the 1st of January 2014, it's more saying that, well, some floor rules might come in the future, so don't pay out all your capital day one.
That's your conclusion, but I think that there is an ongoing discussion. Yeah.
When do you expect that to come at the earliest from the Basel committee and the working groups there?
There are actually, the way I see it, there are a number of avenues. There is the Basel committee working on it, but also EBA, and so I can't really say when it will happen. It's just that I think everybody should be aware that it's being discussed. So we don't have a timetable or when things are supposed to be introduced.
In those discussions you have within the Basel Committee and when you compare different countries, etc., do you still get comments that we have relatively low risk weights in the Nordics? Is that kind of an issue from a European perspective, or something that is being discussed? Or is it widely accepted that is the case?
No, I think it's not all so much our colleagues from other central banks or supervisors. It's also from investors. In particular, what was, and all of you are aware of it, what was on being discussed a lot was the risk weights on mortgages. And there might be very good reasons for that, why we have low losses. But there might also be some risks that haven't been captured. Now the Swedish FSA has decided to increase it. Now we'll need to see, what impact that will have and how that's viewed. So I think, as Justin said, we have high reliance on wholesale funding. It doesn't help being questioned on all the risk weights, in particular the mortgages maybe. So now I don't hear that all the time, but it comes from a number of sources, not only market participants.
And if you look at comparisons, we are not, earlier we were at the lowest level with our risk weights, but now we may be in the middle of other countries. And I guess the Basel Committee will continue to follow up on this. And it may be not wrong to be at the lowest level, but it is, as Matthias said, we are getting a lot of questions on why we are at the lowest level. So I think we feel more comfortable with the 15% risk weight. Okay, more questions?
Well, you have a chapter where you go through the Liikanen report and similar things that have been implemented. What's your view on it? Is it something that would be relevant for Sweden, for instance?
I think we actually had a public consultation that we published on that, and we said something like, well, it's not the highest on our agenda. We think there is the Basel agenda, there is the CRD4, there is a lot of things that is on the regulatory agenda, and let's continue with that first and see whether or not that's needed. But I think there will probably be more coming out from EU on this. So then we will have to dig into it and see, what would be the implication and how should we view that from a Swedish perspective.
Okay, thanks.
So for those of you who are on the telephone line, are there any questions you would like to raise? No?
Can I ask regarding apartment prices? That is still increasing quite rapidly. And you mentioned the risk weight floor. There is also caps on LTV, but demand seems still to be very high. What would be your recommendation as the next step to try to cool down the market, avoiding a bubble to be created?
Yeah, I think there are quite many organizations and authorities who are seeing that we may have a problem in the housing market. There have been several reports highlighting this in different areas. And I mean, from a central bank perspective, we don't really have a lot of tools to step in. And we have our repo rate, and in the connection to our monetary policy discussions, we have also raised this issue. But I mean, there is, especially in Stockholm area, maybe Gothenburg and Malmö, you can see that the demand is higher than supply, so there is probably a need to build more apartments and houses. So I think that is one thing, but maybe there is also a need to review, I mean, what is sound household loans? I mean, is it sound to have a mortgage loan on 140 years? I think that is the length if you look at the new loans today. Maybe it would be more sound that people would amortize a little bit at least on their loans. So this is also an issue that I think the supervisory is discussing, and the Ministry of Finance, they have issued a mandate to the supervisory authority to request banks to provide mortgage customers with a sort of amortization plan already from the beginning, so at least there is a choice. There are other areas that where there may be a need to review. So I think you should look at all kind of issues linked to this market, and we have to rethink how we can do this better. But part of it may be the central bank, but part of it is probably the government, and part of it may be the supervisory authority and other organizations and authorities.
One question on the bank's foreign funding. You write about the pension funds in Sweden having to swap currency or hedge the currency risk. And some banks have also highlighted that that's one of the reasons to why they fund so much in dollars and euros. Is this something that you've looked into more, that where a policy change can, or something that can change within how the structure within the pension funds and so on? Because right now they're hedging short term rather than long term.
Mm-hmm. Yeah, I think from our perspective, I think we have known that this for some time. What we have done now is that we have had discussions and interviews with more of the participants from the insurance sector and also the banks, of course. So far, we haven't done all the background work that we need to do to say should there be changes and what and how should we do that. But that's certainly something that we are thinking about. And how can we do that? I think when we are looking into it, it's true that the risk from the banking system and for the banks are a bit different, but it doesn't mean that all risks are off the table. It's just that there are concentration and counterparty risks, which is less than if you have the exposure. And there are a few banks, mostly in London, that it's the counterparty, so there are still risks. But it's something we're thinking about.
Okay.
You're highlighting external risk as the highest risks, as always. But European risk as the major risk for the Swedish banks. Can you say, have you become more positive or more negative the last 6 months to the European development?
I would say it's more or less the same. I mean, we are relying a lot on Europe, both in the economy but also in the financial sector. And I think from a more general perspective, there have been quite a lot of steps taken in Europe in order to improve the cooperation and the organization of issues, and the European Central Bank have contributed a lot with oil in the machinery. So, and there is a lot of discussions now going on in order to set up the banking union. So I think there are steps taken that are in the right direction, but still, we can see in many countries that growth is very low, and it seems like it may take rather long time before at least some of the Euro countries will be back again at a more normal basis. So I guess that is a question mark a little bit. When will we see the upturn? And
there's been a lot of initiatives, banking union and so on, and I think that has calmed down markets. But at some time that needs to be delivered. As long as it's being delivered, I think you're probably on a better pace forward, but that still needs to be seen. So, do you think we have missed anything?
No,
domestically?
No, not really.
Okay, so maybe this takes us to an end. Thank you for coming.
Thank you.
Thank you.
Thank you very much.